In March 2021, something happened on Wall Street that no one was supposed to see. In 48 hours, just 2 days, over $20 billion had vanished. It wasn't stolen. It didn't disappear in a crisis. It didn't get lost in a war. It just was gone. And the person responsible? Most people have never heard his name. His name was Bill Hwang, born in South Korea, raised in the United States. A deeply religious man who once said the purpose of money was to serve God. He was not flashy. He had no yacht. He never appeared on magazine covers. He never tweeted. He was invisible, deliberately. He ran something called a family office, a private investment fund, closed to outside investors. No public filings, no mandatory disclosures to regulators. In the financial world, a family office is a ghost. It can operate in the shadows, legally. And Bill Hwang, through hard experience, had learned exactly how to use that. This was not the first time Bill Hwang had been at the edge. In 2012, he was running a hedge fund, Tiger Asia, and the SEC came knocking. The charge? Insider trading. He had been using confidential information to trade Chinese bank stocks, profiting while others had no idea what he knew. He settled, paid a fine, admitted wrongdoing, and then he was banned from managing public money. For most people in finance, that would be the end. Bill Hwang simply started a family office. No outside investors, no SEC oversight, no limits. He named it Archegos, a Greek word meaning one who leads the way. The irony would only become clear later. With his personal wealth and money borrowed from the biggest banks on the planet, Hwang had begun building positions, billions from each, quietly. But this is where the story gets dark. He wasn't buying stocks the normal way. He was using something called total return swaps. Think about what that means. Hwang could control billions of dollars in stock without his name appearing anywhere. No filing, no disclosure, no public record. The banks held the shares officially, but Hwang held the power. And he was doing this simultaneously with multiple banks at once. Each bank believed it was his sole lender. None of them knew about the others. At its peak, Archegos was controlling positions worth an estimated $100 billion from a fund that had started with perhaps $200 million of his own capital. This is called leverage, borrowed power, multiplied risk. It works perfectly until it doesn't. In early 2021, some of Hwang's biggest bets had slowly begun to turn against him. Viacom CBS, Discovery, a handful of Chinese tech stocks. The prices started falling. And when prices fall on leveraged positions, the banks call. It's called a margin call, pay up, or we sell your positions to protect ourselves. Hwang couldn't pay, not because he was poor, but because the numbers were simply too large, the leverage too extreme. And so the banks began doing what banks always do in a crisis. They started selling. Billions of dollars of stock dumped into the market all at once, not in secret, in broad daylight, in front of anyone watching. On the morning of March 26th, traders across Wall Street had noticed something strange. Massive block trades, huge sell orders, stocks collapsing with no news to explain it. Something very large had broken. Within 48 hours, the full picture slowly began to emerge. Archegos Capital was gone. Not restructured, not sold, obliterated. The damage to the banks that had trusted Hwang with their money. Credit Suisse, $5.5 billion in losses. Nomura, $2.9 billion. Morgan Stanley, approximately $1 billion. Goldman Sachs, UBS, Deutsche Bank, hundreds of millions each. Credit Suisse would never fully recover. A bank that had survived 2 world wars, the Great Depression, and the 2008 financial crisis, had been brought to its knees in part by a single man operating out of a quiet office in the heart of Manhattan. 2 years later, in 2023, Credit Suisse was taken over by UBS in an emergency rescue. The shadow of Archegos was still there. And Bill Hwang? In 2024, a federal jury in New York found him guilty on all 11 counts: fraud, racketeering, and market manipulation. The man who had operated in the shadows was finally seen. The Archegos collapse was not a mystery. It was a system operating exactly as it was designed, with no one checking who held the other end of the rope. The banks were chasing fees, chasing business, asking very few questions. Each one assumed it was the only lender. None of them were. This is what happens when leverage meets opacity, when borrowed power meets absent oversight, when everyone profits on the way up, and no one asks what happens on the way down. Markets are not just numbers on a screen. They are agreements, built on trust. And sometimes, that trust is exploited by people who know exactly how the shadows work. The system did not fail. The system worked exactly as it was built. And that is the most unsettling part of this story. Bill Hwang bet everything on a system that kept him invisible. For years it had worked. Then in 48 hours, it didn't. $20 billion. A bank that survived 2 world wars. A conviction for fraud. All from a man most people had never heard of. The shadows of finance are full of names you don't know yet. Now tell me, if a single investor can secretly control $100 billion with almost no oversight, what do you think is happening right now that we haven't found out about yet? Leave your answer in the comments. This video is for educational purposes only, not financial advice. Always do your own research.